What if I told you there could be money sitting in government programs, tax records, or benefit systems that belongs to you, but nobody is actively reaching out to tell you about it? For many retirees, the challenge is not eligibility. The challenge is awareness. Today, we're going to walk through 5 commonly overlooked tax benefits, rebates, and Medicare-related adjustments that may help retirees keep more of their money. Some of these opportunities can be worth hundreds of dollars. Others can be worth thousands. And before we begin, a quick note. I am not a lawyer, CPA, or financial advisor. This video is for educational purposes only. Tax rules, income limits, and eligibility requirements can change and vary by state and individual circumstances. Always verify details with the IRS, Social Security Administration, your state tax agency, or a qualified professional. If you're new to Decoding Finance, welcome. Our mission is simple. Explain complicated retirement and tax topics in plain English so you can make informed decisions with confidence. A few years ago, I spoke with a retired healthcare professional. We'll call her Helen. Helen was 67 years old, lived in Pennsylvania, owned her home outright, collected Social Security, received a pension, and took occasional withdrawals from her IRA. Like many retirees, she believed everything was in order. Her taxes were filed every year. Her bills were paid on time. She had never received a notice from the IRS. Yet after reviewing her situation, we discovered several opportunities she hadn't explored. Opportunities that could potentially reduce taxes, lower expenses, or recover money she may have overpaid. Her situation illustrates a broader lesson. Many retirees never review the benefits, exemptions, and adjustments available after retirement. Let's look at 5 areas worth checking. The first area involves federal tax deductions. Tax laws change frequently, and new deductions or adjustments are sometimes introduced that taxpayers and even preparers may overlook during the first filing season. If you're age 65 or older, take a few minutes to review your 2025 federal tax return. Look carefully at the deduction section and compare it with current IRS guidance for older taxpayers. If you believe a deduction was missed, you may have the ability to file an amended return using Form 1040-X. Many retirees never revisit a filed return because they assume everything was handled correctly. In my experience, that assumption alone has cost people significant amounts of money. The key takeaway here is simple. Never assume a filed return is automatically optimized. Review it, verify it, and if necessary, amend it. This is one of the most overlooked areas in retirement planning. Across the country, states and local governments offer programs designed specifically to help older homeowners. Depending on where you live, these programs may come in the form of property tax rebates, assessment freezes, homestead benefits, senior exemptions, tax deferral programs. The names vary, but the purpose is the same: reducing housing costs for eligible retirees. A few years ago, I met a retired couple who had lived in the same home for over 20 years. They had never once asked whether they qualified for senior property tax relief. One phone call to their local office revealed a benefit they had been eligible for years. The lesson? Don't assume benefits are automatic. Many programs require an application. Call your county assessor or local tax office and simply ask, "Are there any property tax relief programs available for homeowners over age 65? That one question could be extremely valuable. The third area involves state income taxes. Many retirees know federal tax rules reasonably well. Far fewer understand how their state treats retirement income. Some states fully exempt certain retirement income, others provide partial exclusions, and some offer special deductions based on age or income level. That's why it's important to review pension income, IRA withdrawals, 401k distributions, Social Security benefits through the lens of your state's tax rules. I've seen retirees assume they owed state tax on income that may have qualified for favorable treatment under state law. A quick review of your most recent state return may reveal opportunities worth discussing with a tax professional. The goal isn't to find loopholes. The goal is simply to make sure you're paying what you actually owe, and no more. The transition from employment to retirement often changes how taxes are withheld. During your working years, your employer handled withholding automatically. After retirement, income may come from multiple sources: Social Security, pensions, retirement accounts, part-time work, investment income. Because these sources operate independently, Withholding may not perfectly match your actual tax liability. This can create surprises at tax time. If you recently retired and experienced tax-related issues during your transition year, it may be worth discussing your situation with a qualified tax professional to determine whether any adjustments, corrections, or filing opportunities are available. More importantly, make sure your future withholding strategy reflects your actual retirement income picture. A few minutes of planning today can prevent unnecessary headaches later. The fifth area involves Medicare premiums. Many retirees are surprised to learn that certain Medicare costs can be influenced by income information from previous years. This creates situations where someone who recently retired may still be paying premiums based on a higher pre-retirement income level. If your income has changed substantially because of retirement, reduced work hours, or another qualifying life event, it may be worthwhile to review your Medicare premium determination. The Social Security Administration provides procedures for reporting qualifying life-changing events and requesting a review when appropriate. I remember speaking with a recent retiree who assumed nothing could be done. After reviewing the rules and submitting the required documentation, their situation was reassessed based on current circumstances. The important lesson is not that everyone qualifies, it's that many people never ask, and opportunities are impossible to benefit from if you don't know they exist. So let's recap. This week, consider reviewing your most recent federal tax return, local senior property tax relief programs, your state's retirement income tax rules, retirement-related withholding and tax planning, Medicare premium calculations after retirement. None of these steps require complicated financial expertise. Most simply require awareness, a few phone calls, and a willingness to verify that everything is being handled correctly. One thing I've learned after decades of studying retirement finances is this: the people who keep more of their money are not always the wealthiest. They're the people who stay informed. They're the people who ask questions. And they're the people who verify instead of assuming. If you found value in today's video, make sure to subscribe to Decoding Finance, hit the like button, and turn on notifications so you never miss future retirement, tax, and personal finance updates. And before you leave, tell me in the comments, which of these 5 areas are you planning to review first? Thanks for watching, and I'll see you in the next video.